Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so the thing to look at the moment is oil. Oil went all the way down. If you remember, about a month ago, it went down to all the way down to about $96 a barrel, and it's just been creeping up since then. I've been calling oil higher from $100 upwards, and now just yesterday I said it's probably going to go to 120, and at the moment it's at 119. It's probably also going to go, just to be absolutely clear, it's going to go to the $150 a barrel in the near future. Now everyone says, oh, why so negative? Why don't take something positive? I'm just stating the facts. There is a massive demand for oil globally, and there's a shortage of supply. In fact, China now is just reopening. Shanghai is just reopening after a long lockdown, and that's going to further frustrate the oil supply because they're going to suck in every bit of available oil there is globally. So you can expect oil to go up to around about the $150 a barrel in the next month or so. The price at the pumps as a result of that, but in the UK you're probably talking about £2 to £2.10 a litre, maybe more, and in the US you're probably going to see $10 to $11 a gallon, and that is really going to frustrate the motorist. You have to understand that in the States the summer vacations start effectively in June, July, and there is very significant demand overall on gas prices, and therefore the price at the gas pump in the States is going to go much higher, and that in itself is going to cause a huge demand because of the summer vacation of oil. So you've got several factors that's going to push all the way up through to September to about 150 or even higher. It's probably going to surpass the 2012 all-time high. There I think it reached at $156 a barrel, if I recall correctly. So oil is a buy, and also the petroleum companies, whether it's Shell, BP, ExxonMobil, they're all going to be a buy in the short term, purely based on the oil price. What else have you got? You've got some very interesting activity in the chip makers. Nvidia, which year on year has always reached or beat analyst expectations with a positive forecast, for the first time ever has actually given a negative forecast, and therefore their price of the chips has got, their share price dropped, and you can expect other chip makers to be in the same boat. Facebook is likely in the near future going to lay off thousands of staff going to be laid off from Facebook and other high-tech companies, whether it's Amazon, whether it's Apple, whether it's Google, whether it's Netflix. The redundancies are going to hit the high-tech sector purely based on the fact that their shares have been hammered and there's lack of liquidity in the marketplace, and now there's a much smaller marketplace for advertising, and that's where they get all their revenue from. So you need to keep an eye on that going forward. There's going to be more redundancies in the high-tech sector, and the startups, the ones that don't have any profit whatsoever and have got no structure, they're going to suffer the most, and you could see a lot of closures and a lot of bankruptcies when it comes to the startups. Taking Bitcoin has hit 31,500 over the last 24 hours, which is a jump. Remember, it was in a bear market, was red flagged, and yet it seems to have come out. I think you need to sell into the rise on Bitcoin. It is going to go down. Don't be fooled. Don't have FOMO. Don't have this big investor FOMO. If I don't buy now, I'm going to miss it. I should have bought it then, and what should I do? Sit on the sidelines, keep an eye on it, watch it, and don't panic. Okay, it's going to go down to well below $20,000 in the next month or so. So keep an eye. Also, Ethereum is going to go down to around about the $1,100 level. That's something to keep an eye on. You got precious metals. There was a slight weakness in the dollar yesterday. The dollar's gone up today. There's a slight strength in dollar, so you see commodity prices move up slightly over the next day or two. I do believe that within the next 30 days commodity prices will come down if there's a weakening of the dollar. But if the dollar does not weaken, then obviously those commodity prices are not going to go down, whether it's soft grains or precious metals. I do try to mention precious metals all the time because I've got quite a lot of viewers who are into the palladium, the nickels, and the platinums and the golds. At the moment, they are going to be subdued as long as there is a weak dollar. 10-year US Treasury still strong because the investors are seeking a safe haven in times of volatile markets. So you've got 2.76 on the 10-year Treasury, and that yield is likely to fall further as investors buy up the 10-year Treasury. This is Mayor Valensky driving markets. Catch me on Instagram, WhatsApp, Twitter, and any other media platform. Have a good day.